everyone, and welcome to the Friday, March 12th installment of the Silicon Insider, the only uncensored look at life and business in the Silicon Valley. My name is Mike Malone, and you know all the rest, and I'm here with our special contributor, Scott Budman. You know him well, too, business tech reporter for NBC Bay Area, and we're still stuck at home, but not for long, I don't think. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove, and our host for this podcast, as always, is the Silicon Valley Business Journal.
Hello, hello.
Hang on. Did I lose you?
Nope, still here.
Okay, I literally had a Zoom message thing come up. Okay, let's begin. We got a lot of little stuff this week. Nothing major and profound, but you must have been running all over the place covering stories.
Yeah, the big thing really is optimism, because I think not only people getting vaccinated, but the stimulus money that's on the way. And hopefully people are going to be able to not only feel a little bit better, but spend a little more money, ideally on small businesses, which may be able to hire some people back, and sort of that domino effect that when small businesses grow and hire, we see strength in the economy. That said, here in Silicon Valley, the economy has stayed relatively strong because tech companies continue to grow and hire even while they sit at home.
Is it too late for all those little companies? I mean, how many hundreds of thousands of small businesses are dead right now, and we don't know it? They got the sign in the window opening soon, but they're not coming back. I mean, is it too late for this?
I don't think it's too late for this overall. It is too late for some of these businesses, unfortunately. And there are areas here in Silicon Valley where thriving streets are ghost towns, and they probably will be for some time, because it's one thing to go out of business. It's another thing to then get another business into that storefront. That's going to take a while. But some of the businesses I've spoke to say they were on tenterhooks, but then the stimulus came in, the PPP loans came in, and they think they'll survive. So even among some of the small businesses I see, the cafes, the coffee shops, the restaurants, some of the gyms, they're saying they're going to make it because of the latest round of money.
You got to wonder how many companies would have made it if that money had gone out in December, instead of 3 months later. I mean, that's kind of heartbreaking. Anyway, the Dow's at new highs. 31,000. This is one of those, I'm ambivalent about that, because the Dow doesn't necessarily reflect the current situation. It might be saying the Dow could be high because they see inflation coming roaring in because of this immense amount of spending taking place in DC. It's hard to tell what the Dow is reacting to right now.
Right. There's optimism on Wall Street, and there has been for quite some time. But you're right. That's kind of we've realized it's sort of a microcosm of our overall economy and how many people are affected by it. And it's increasing the wealth of a certain number, a small niche part of society. But you're right. The Dow has been booming on optimism that we'll get out of this situation. But the situation is what's keeping so many people unemployed and struggling. So it is kind of a weird dichotomy you're seeing there.
Yeah, so consumer prices are up this week. I've been running around the last few weeks with my sister, helping her find a new house in the Valley. And I certainly know that real estate prices are still incredible. I mean, $1 million doesn't buy you a whole lot. Even now, after a year of lockdown, and people streaming out of the Valley, prices are still up, and they're predicting another 10% this year. It's pretty astonishing.
Yeah, I mean, consumer prices are higher, and that always brings about concerns of inflation. Gas prices considerably higher. And you're right, the big wild card in this, I think, is the Bay Area housing market, which has been tamped down by the pandemic, because people haven't been, moving and walking in people's houses and putting their houses on the market. As soon as that opens up, does that mean prices will fall because of less scarcity, or fears of inflation making prices rise more? And if we really do see inflation, I mean, we haven't really seen that in almost a generation. I mean,
Yeah.
I've got teens that they don't know what inflation is.
Yeah, well, and I would really not like to live through another, 20% interest rates and all of that stuff. That was a very disturbing time. It's very unpredictable. I mean, it was unpredictable in a different way. You didn't hold on to money. You bought things. You'd buy houses with these gigantic balloon payments sitting out there 8 or 10 years away that you had to sell the house then because you couldn't possibly pay it. It was a very strange time, and I dread ever going back to it. But I have a feeling we're going to see some of it this year, just because, by necessity, we've spent an awful lot of money on stimulating the economy and keeping it going.
Right. And on top of that, you talked about the stock market. Things are frothy. I mean, we're seeing people with money spend not just on stocks, but on cryptocurrencies, on strange tokens. There's obviously a desire to spend a lot of money. And that comes in waves. Clearly, we're at the top of some kind of a weird, frothy wave.
Yeah. Okay, let's go on to something else. Facebook. All those antitrust suits, all the states have filed against Facebook. Facebook said, no, we're not a monopoly. We have innovative free products that deliver value. So therefore, you don't get to sue us. What do you think?
I think this is another dodge by Facebook. I think they're going to spend.
They look like a monopoly. They smell like a monopoly. They talk like a monopoly, but we're not a monopoly. We're just creative.
Yeah, but look, the evidence that had been brought up before on Capitol Hill is that when companies that challenge it, or even much smaller companies like Instagram that haven't challenged it yet, even show a hint of challenging Facebook on the horizon, Facebook comes in and takes it out, because they have so much money. And enough of that behavior, and people are going to start calling you a monopoly because you've pretty much taken out everybody else. Now they can say,
you're acting like one. Yeah.
Right. And they can say, no, there are other social networks, and there are, but there's only one Facebook, and it has gigantic power, not just in the social media world, but in the advertising world. I mean, you look at Google and Facebook, and those two have so much of the advertising market. I think they're going to spend a lot of time on Capitol Hill in 2021 calling themselves whatever they're calling themselves to try to deflect charges of antitrust.
Well, speaking of large companies, Apple sued a former employee in federal court in California Thursday, alleging that Simon Lancaster, who was a product design architect for many years, apparently cut a deal with some reporter to provide them with inside information in favor of favorable coverage for his new companies that he's involved in. Okay, so, at some point, you've been a reporter for a long time. I was a reporter for a long time. It used to be you would break stories about impending products from companies. I mean, there was a great reporter named Mark Simon. He became a political reporter eventually in California, the State House, but he started out electronic news, I think it was, and he would pre-announce company products every week. And he learned to read upside down. He'd go in and talk to a VP or something and see a new product, right up on the guy's desk and read it upside down and run the story. That used to be part of journalism. That used to be part of what we did. And now it's somehow, and Apple led this charge. They're the ones that really did it with the iPhone, that if you wrote anything about their impending products ahead of time with any kind of information you'd gotten from inside the company, suddenly you were the bad guy. You got sued and everything else. And when did that switch? I mean, did Apple have that much power that they could say, oh no, even if one of our employees hands you the prototype and lets you to write about it, if you do that, we'll crush you?
I mean, I don't know. I think in this case, the lawsuit is against the employee that stole insider information. As a reporter, if you can get an employee to tip you to something, that's gold. That's obviously.
Yes, yeah. Right. So how come that suddenly become taboo? That if a reporter actually does it, even their own peers jump on them. How could you do such a thing?
I don't know. I don't think it's that taboo. I think we're all still looking for a scoop, and it's good to get the information from the inside, but not if someone steals that information. That's
No, but if
insider
it's in their
trading.
head, if it's in their head and they've left the company and they tell you what they know, isn't that a scoop? That's not trade secret theft. That's inside information, right?
Right, but yes, I mean, there's a fine line between, and you said it, inside information. There's a fine line between what's legal and illegal. On the reporter side, I really don't know many people who have come under fire for getting tips from leaks inside companies. That's still a thing, and that's still happening. Ask Kara Swisher about the last days of Yahoo and all those leaks from inside the company. And it was, bam, headline after headline, day after day, and clearly someone was leaking, and it drove the company crazy. But it's currency for a reporter still.
Karen and she had a giant publication behind her, right?
True.
So she could do that kind of stuff. But I'm so tired of this supine business media that they let businesses push them around. They should be taking them out. That's their job. And it bothers me that we've lost something over the last 20 years in that regard. Anyway, the old man gets off his soapbox. Let's see. Roblox IPO.
Yeah, this is a big one for a lot of reasons. For one thing, it's sort of the anti-quick to market trend that you're seeing with SPACs and companies going public right out of the box. Roblox has been a company for 17 years. I remember covering them in the early days, and they have grown very gradually, both in terms of their audience and how they play games and stream games. They've also grown very gradually in terms of the funding that they got and have received. And then this year hit, and all of a sudden everything for a big gaming company was accelerated. I mean, imagine if you're Roblox, you have all these young people playing games, and then all those young people have hours during the day when they can't even go outside and play. It becomes a Roblox world, and all of a sudden their revenues go up, their user base goes up, and everything just goes up. And it's like, all right, let's go public. And they do very successfully within the last couple of days. And it was a direct listing, kind of like what Spotify did, and what the trader, the symbol is work. It was just taken out by Salesforce. Slack did. Slack also did a direct listing. And so, we don't really know how much money was left on the table versus the IPO price, but it did very well on Wall Street on day one and even day two. And this is just a pandemic play again that really, really grew in the last 8 to 12 months.
So was this an anomalous year and they're taking advantage of it, or are they the future of gaming? Is this the way it goes?
Yeah, this is the way it goes, I think. I mean, they may not see this kind of growth because hopefully kids will get back in school and get back to movie theaters and playgrounds and all that stuff. But this was, if you look back over the last several years, over the last several years, this has been a growth business and a growth company. And I don't think that stops. This is, you can create your avatars, you can trade in Robux, I think it's called, with sort of its own little currency. So it's its own world for young people, and they really appreciate that. And they seem to love the games too.
So you dropped me a note that said, this, between old-fashioned IPOs and SPACs, 2021 is turning out to be one of the great years for going public, which is impressive. You kind of sneaked up on us. We weren't really, we're noticing, these individual cases, but you add them up, this is starting to look like 1999 or something.
Yeah, in a lot of ways. One, because there's a lot of companies that are going to market, and two, because maybe some of them shouldn't be going to market. We have to look at this with a skeptical eye as journalists, and some of these companies they don't have the revenue, they don't have the user base, they don't have the profitability. Even Roblox is not profitable, and it's been around for 17 years. By now it should have that solved. So far the year has been gangbusters for companies going onto the exchanges, the NASDAQ and the NYSE. But that could change. You know, at the top of the podcast, Mike, you had hinted at, whoa, the specter of inflation. What would that do to venture capital funding? What would it do to companies trying to go public? You know, we haven't seen that in a generation. And so the year is starting out very strong and a little bit frothy because there's a lot of money. And stimulus puts even more money potentially on the sidelines. So this could carry on. But, you know, the whole year is still, to me, a big question mark in that area.
I remember interviewing Jerry Sanders of AMD, and I said, you know, it took you 12 years or something to go public. And he said, well, that's because we went public the real way, which was we had to show a profit over multiple quarters. We had to be a real company. And I thought that was a kind of stinging indictment of our modern economy. But yeah, I mean, who knows what these SPACs are going to end up being? You know, I mean, it's still a speculative business financial instrument that has no track record on it, and everybody's piling into that world. And who the hell knows what's going to come out of it in the long run when we look back on it?
Right, and you know, now you're getting
nervous.
Right, you're getting athletes involved, celebrities involved. That's usually a hint that we're at the top of something. So yeah, you got to watch those things. But there's still, again, a lot of money on the sidelines, and it wants in. There's this fear of missing out when companies go public, and a SPAC makes it easier and faster. So I think you're going to see these at least for a while, because so far, for the most part, they're making successful debuts.
Well, they're making coin, but
yeah,
we'll see. Yeah, let's see if their investors do. Fuji is suddenly making a move in town. Fuji Film, you know, but they're also, you know, they're a Japanese everything, you know, chemicals and all this other stuff. And they're getting really into autonomous vehicles, especially LiDAR. And they've opened up a research laboratory. They've had it open near Apple. Everybody's got to huddle around Apple if you want to look like you're cutting edge. But they just put some change into Motus, which is a venture capital firm. And they're going after autonomous mobile robots. So we got another player coming to town as opposed to leaving town. And I looked at Motus, and it turns out they have Quanergy systems, which makes LiDAR, which is the other technology that's hot right now. We haven't really talked about, but there's rumors that Quanergy might have an IPO coming up soon too. So we may become the LiDAR center, you know, of the world. I mean, we'll see. Finally, we got a crazy story. I had to tell you about this one. Have you ever heard of the guy named Beeple?
I have now, yes.
Yes, you have. Okay, his name is actually, I'm trying to look up, Mike Winkleman. And, you know, he chose the name Beeple. And he just sold a work of art via Christie's, $70 million. Okay, and you know what it is, right?
I do, yes.
He's created a work of art. It's digital art, but it's not only that, it's called an NFT. It's a non-fungible token. So he creates a work of art that in turn exists only in Bitcoin. And then, so you have control over it. So it's blockchain backed. And then people bid on it as a private work of art. And I guess you come over to the guy's house or something, and he shows it to you on his computer screen. And he said, I bought that for $70 million. Well, you know, what do you think?
I mean, I think we're very frothy. This is crazy money right here. Think about the art market. I've tried to explain this to people before. You have a work of art that is an original. And often, because there are lots of rich art collectors out there, that original piece of art goes for gazillions of dollars.
Right.
And yet there are copies that we can see, we can buy, we can put on our own wall. They're obviously not as valuable because the original is where the action is. With a non-fungible token, that's sort of what it means. It means there's going to be one original, and that's a digital original. Now you can download plenty of copies of this guy's art and you can see it. They are having NFTs, which are literally highlights from the NBA. The same highlight I can download on YouTube or watch on ESPN, but the original, for whatever reason, is the one that gets bid up to all this money. Is that a sign of a bubble? Absolutely 100%. But again, it's kind of like the art world, which I was never a part of. My family was never a part of. I have no experience in why people buy and spend lots of money on art, but you have the original, and that's what is happening in the digital world. They're trying to sell the original protected by the blockchain, and that, for whatever reason, is worth $70 million.
This is another example. Even before he died, Tom Wolfe did it one last time because he did a whole piece, one of his amusing cultural analyses of the art crowd down in Miami going to this famous annual art thing where they go in and they're told, oh, okay, this flayed horse in a tank of alcohol is actually very, very valuable. And most of these guys don't really have much art sense, but they have experts that come with them and say, this is a major investment. You got to buy this hearse, you got to buy this or that. And so they put up enormous amounts of money and they fight each other for the opportunity to own it. I don't know if they aesthetically enjoy that thing, but it's an investment. And it's a curb against inflation. I mean, I cover the antique auction market. And you can see at certain times, antiques will go right through the roof because it's a hedge against inflation, which makes me wonder if these investment advisors are telling these rich art guys, this is original, it's a one of a kind. It may be, in their minds, they may think it's the dumbest thing they've ever seen. It's like having an old email. I'm happy to sell all my original old emails from 5 years ago. But it's an investment because it's perceived as valuable and other people will compete for it. And this may be the market reacting to the current economic situation. Get out of cash.
Maybe so. Jack Dorsey is apparently selling his first tweet in this.
Yes, that was my next topic. Jack Dorsey is selling his first tweet. And currently the bids are pushing $3 million. And all he basically says is just setting up my Twitter. That's his first tweet. What's interesting is you can still publicly reach that tweet by going on in your Twitter history. Okay, so it's original, but it's also pervasive. And yet somehow, I don't know if that one is because it's going to be valuable or it's because somebody wants to get to know Jack Dorsey and is willing to pay $2.5 million for that opportunity.
I don't know. I mean, there is something at least to be said. Hey, this is the first tweet. There's something historic in that. But you're right. It still exists in all sorts of places and always will. But again, like we said with art, the original is often worth a lot of money because people decide it's worth a lot of money.
You're awfully benign about what appears to be mass stupidity. You know that? I think you had good breakfast this morning. You're feeling good because
I've been talking about this a lot, actually.
This is nuts. This is nuts. You and I both know this is nuts.
It's true. A lot of people ask about this, so we've been talking about it and trying to break it down. And it's just comes down to a lot of really wealthy people with a lot of time on their hands, and they're literally creating new markets, new collectible markets, and who knows how long it will last. But think of it like cruise ship stocks. We may someday go on cruise ships again, and so people are buying those stocks thinking they're going to make them money. But if this pandemic stays around much longer, cruise ship companies are just going to go under and that money will be wasted. Look at it that way with these digital fungible tokens. People are guessing in the future they will be the new art, but it might not be. So there's the risk.
We can comfort ourselves with the knowledge there's a lot of people out there with a lot of dollars and no cents, and luckily they're dumb enough, they spread it around. So once they make all that money, they give it all back to us in one way or another. Finally, I have a headline here from Yahoo. How Snowflake CEO Frank Slootman became a billionaire by ripping up the nice guy Silicon Valley playbook. Grove wrote to me and said, there's a nice guy playbook in Silicon Valley. And I said, I've never seen it. You know, maybe it's just past when you become a CEO or a billionaire, maybe they mail you the nice guy playbook. But I've never characterized this town as nice guys.
No, I mean, I think that if what they're talking about is probably, say, Mark Benioff and Tim Cook versus, Mark Zuckerberg and the guy from Coinbase, who famously said, we're not getting political, we're not going to go for any of that PC stuff.
Save the world guys versus screw the world guys, right? I mean, that's
right.
So apparently Slootman is now being seen as one of this hidden cabal of conservative CEOs who says, our job is to make money, reward the investors and the shareholders, and take care of our employees. And to save the world stuff, leave that to, nonprofits.
I don't know, there's always been, even among the Benioffs who, legitimately donate a lot to charity, there's always been we have to protect our shareholders, we have to take care of the business and the bottom line and take care of our employees. So even if you're a conservative CEO versus a nice guy CEO, those things are always going to be in place, or else you're going to be a former CEO. So yeah, things might get a little more political because people are looking for that sort of thing, but so you still have to meet those bottom lines.
Is this a trend too? I mean, we got to remember 10 years ago, if you went to Harvard Business School, they said you had one job, reward the shareholders. And that was accused of being a really cruel thing, fire employees at will, do whatever it takes, make money for the shareholders. And then all of a sudden, Harvard did a flip-flop, and all the other business schools followed and said, no, it's intangible assets. You have to help the world become a better market for your products and be enlightened. Is this a sign that we're going to start flipping back the other way again?
No, I don't think so. In good times, companies are able to donate a lot to charity, and that's good. And so we hear a lot about that. When times are tough, they lay people off, and then everybody's cruel, and it's horrible, and we hear about that. We've been in good times for a little while, had a year of recession. Tech companies haven't had to lay a lot of people off, but again, the future is very much a question mark, so we don't really know what's coming next. Politics is making headlines no matter what. I don't think it's going to make a difference. I really don't. I think where it's going to make a difference is in the employee activism, not at the top, but the employees. Are we going to see more walkouts at companies like Google? Are we going to see people quitting Facebook because they disagree with, how that's affecting things? That's what I think we should be watching for, is the rise of the employee, perhaps.
Yeah, the young employees seem to have veto power now over most major institutions, including the New York Times. We've just seen that in the last couple of weeks. We'll see. National Semiconductor famously was a rough place to work. But when you couldn't hire anybody in Silicon Valley because things were booming so well, they put in a park course and they put in all these employee things and all that. Then the moment book-to-bill flipped over and the Valley went into recession, they shut down, turned off the lights on, all those things, fired half the people, and got back to being, National Semiconductor, the toughest company in the Valley. So we'll see. Hard times. We've had hard times in a weird social cultural way, but we really haven't seen a nasty phase since 2008. And I wonder if employees are going to be as activists the next time that happens, when they're thinking about keeping their jobs in a hard economy. We'll see. All right. Well, that's it for now, folks. Sorry I wasn't here last week. I had my second COVID vax, and I was one of those people that got wiped out by it. But I'm back. I even dressed up for the occasion. I actually, for once, look better than Scott. I'm not as good looking as him, but I at least dressed nicer than him. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, and Apple Podcasts, plus YouTube. Have a great weekend, folks. We'll see you next week. Daylight savings time is this weekend? Yes. Wow, that's crazy. Well, and St. Patrick's Day next week, so I may be indisposed again. Bye-bye. See you later.